Hi, Andres Romero with E2E Financial, talking to you about tax planning that you can start doing now. Things to look at from a tax planning perspective. Number one and most important is to get a tax estimate from your CPA, your dental specific CPA, for the current tax year. Your CPA is probably going to need you to gather information in order for them to be able to do an accurate estimate on what your tax liability is potentially going to be. Once you have that information, then step two is take a look at some potential tax reducing strategies that you can implement. We at E2E Financial always recommend you start with your current retirement plan. Could be a 401k plan, a SEP, a simple IRA as an example, and make sure that you're maximizing both the employee deferrals and also if you have an employer contribution like a profit sharing contribution, look at how much you could potentially maximize that. If you have a 401k plan, the profit sharing calculation is going to be run by your TPA, also known as your third-party administrator. They're going to need your current employee census to be able to run that for you, but do get an estimate on what your profit sharing is. And when you get that back, your CPA is probably going to want that information to run you a more accurate current tax year tax estimate. If you haven't implemented a 401k plan, you can look at using some of the tax credits that are available through the government that offset not only the setup costs, but also contributions in the first few years. So great time if you don't already have a retirement plan to look at setting one up. Number three is look at your investments. You might have losses that you've taken on your investments. You could harvest those losses to offset some of the taxes. If you're charitably inclined, you can also look at what charitable contributions you potentially would like to make this year and how that can help offset your taxes. Those are some of the strategies that you can look at as well. Number four is look at the current tax legislation and how it can help you. You mentioned something already, and that's through the Secure Act 2.0, which is a current tax law that passed in the last couple of years that, as I mentioned, if you don't already have a 401k plan, can reduce your costs of not only setting up the plan, but make initial 1 to 3 year contributions and help offset those costs. So using current tax legislation like Secure Act 2.0. And number five is review your overall financial plan. And along with financial planning, the tax planning that comes with that. If you haven't done that in the last few years and you're looking for a second opinion or someone to talk to, we at E2E Financial are here to help, and we offer you a free initial consultation. Go to our bio, click on the link to schedule a time with us. You can also go down to our description, click on the link down there and reach out to us. We're here to help you to make it the best year ever. Look forward to helping you and don't hesitate to reach out. Take care.